start with this gun story, certainly one of our top company stories today. What did you make of the move? Was it somewhat unexpected?
Well, this stock has been not trading for over 6 months now. It entered administration today after lenders wouldn't provide any more funds to keep the company afloat. And over the past 6 months or so, they have been looking to restructure or a capital raising to keep the company going. But really, this company has been struggling over the past couple of years. We saw a bit of optimism in March after billionaire Richard Chandler was considering a major investment in the company. But after this fell through, it did look quite dire for Guns. And they have been selling off assets over the past few months, trying to be able to continue paying their employees to stay afloat. And it looks like it's just failed now, and they've gone into administration, which the reaction may be a little bit mixed, because considering that the company does employ over 645 people, this would be disappointing. But on the other side, Guns, as there's been plenty of opposition to this company, they do operate in quite a contentious environment in the past, logging in native forests, and of course this Bell Bay pulp mill, which there has been a lot of opposition against. If you look at any of the online or any of the polling about community or just general opposition or agreement towards this mill, really there was a lot of opposition against this. So maybe some people would be pleased to see this company go, but again, 645 jobs at stake here. It is very disappointing. They were looking to move away from that native forestry logging into a more plantation-based business. However, they have been really struggling under significantly lower wood chip prices, as well as that high Aussie dollar really hurting their exports.
Tim, we've also got Newcrest announcing a $1 billion bond offer. Shareholders don't seem too excited about that, those shares declining today.
That's right. So they issue around $1 billion in corporate bonds, but the shares have fallen around 1% today. We are seeing broader losses across materials, so maybe not all that surprising. They're going to be using this to pay down some of their debt, as well as for use in working capital. And whilst for Newcrest, the past quarter has been quite good, the share price has risen around 25% over the past quarter. They still have been suffering under some production issues. We saw only last Friday that production was cut to 25% at the Lihir mine over in Papua New Guinea. There's been continuing ongoing production issues over there, and that mine is very important to Newcrest, as it is its largest gold production mine, and is expected next year in the full year to produce around 700,000 to 900,000 ounces of gold. So overcoming these production issues is very important for Newcrest, and you can actually see it reflected a little bit in the share price. If you have a look at a 2-year graph of Newcrest mining, you can see the top blue line there is the price of gold, while the bottom black line is Newcrest share price, and that has been significantly underperforming the gold price. A lot of this to do with its production issues. I think there's been a little bit of loss in confidence in Newcrest as well, and certainly a lot of interest in some possible better mining, gold mining options in the market, particularly in that mid-tier space. You look at some of those companies such as Regis Resources or St Barbara. Some of these companies have very good operating cash flows. They have strong growth outlooks, and they also do have a very high profitability in terms of per ounce of gold mined. So Newcrest today falling back amongst some broader weakness in the material stocks.
What about the broader market, Tim? We seem to just keep hitting our head on that 4,400 level. We don't seem to have any direction either way at the moment. What are you looking for in terms of catalysts over the next week or so?
Sure, so I think we're expecting a soft day today. The leads were soft from offshore, and the commodity prices were lower, which is weighing on the materials sector, which is off around 1% today. But it's not really a typical risk-off day as such. It's a little bit mixed. I mean, you'd expect on these kinds of days that some of the defensive sectors would be outperforming it. If you have a look at some of those traditional defensives, such as healthcare and utilities, they're actually both underperforming the broader market today. But their market was assisted a little bit in the morning by some strength in the financials, but this has sort of dropped off a little bit. Some of the big four banks were up around 0.5% earlier, but they're trading back towards flatter territory now. So the market paring back a little bit down to 0.3%. But the market, of course, there's been a good rally in the last little while on expectations and then the realisation of this central bank easing. But the question now is, will this continue? Because again, we've hit this 4,400 level, and if we have a look at a chart of the Australian market here, you can see this blue line here representing the 4,400. Back here in May, we got just above that 4,400, but just didn't break through with any conviction, and the market fell back considerably. So the market here hitting resistance again, and I think really to be able to break through this level, at the moment global economic data is just not supportive of any significant rally.